Whether we consider ourselves dividend investors or growth investors or really anything else, it's really easy to get caught up in looking for the next best thing. But sometimes the best possible investment could be right in front of you. And one of the companies that doesn't get talked about often, that is a phenomenal dividend growth option when we look at the historical metrics, has been Snap-on, and that is stock ticker SNA, trading at $276.35 per share. Over the past year, they're up around 7.31%, but what I want to really talk about and focus on in this video is the phenomenal dividend metrics this company has seen over the past decades. Let's go ahead and jump into my dividend breakdown sheet. Now, like always, if you'd like to be able to download any of my spreadsheets and also get access to the ticker data add-on that allows you to automatically import stock financials straight into your spreadsheet, then you can head over to tickerdata.com at the link in the description. But let's go ahead and come up here and plug in SNA and hit enter. And you can see, thanks to ticker data, all this data will automatically load in. Now let's go ahead and start looking at these dividend metrics. The first thing we'll notice, the starting dividend yield for this company is pretty modest, sitting at about 2.7%. That is a decent starting dividend yield, but it definitely doesn't tell the whole story surrounding this company. Come down here and look at the yearly dividend payments over the past decade. Now, as a dividend growth investor myself, with a long-term goal to live off dividend payments, I want to see companies that are constantly increasing the amount they pay out in dividends. And one of the things we'll notice, this company was paying out about $1.58 in dividend payments back in around 2013. But if we look at where they were in 2023, they are paying out $6.72. So the amount they paid out in dividends absolutely exploded over the past decade. And we can see that as a 10-year dividend CAGR sitting at 14.93%. And if you look at the dividend payments now, it's sitting at $7.44. So the 5-year dividend CAGR also sitting at 13.62%. So the dividend payments clearly have exploded for this company. Now, one of the things you have to look for when you see high levels of dividend growth is you want to make sure the free cash flow payout ratio over time has stayed somewhat consistent, and you also want to make sure the free cash flow has been growing as well. So let's go ahead and start by looking at the free cash flow. We can see the 10-year free cash flow CAGR sitting at about 12.65%. That's pretty solid free cash flow growth, and we can see the 5-year free cash flow CAGR sitting at 9.5%. So when we look at the free cash flow payout ratio over time, for the most part, it's been pretty steady except for a huge spike up in 2022 when it got to around 53%. If we look at 2022 down here, on our free cash flow versus dividends paid out, it's pretty clear they didn't generate quite as much free cash flow as they had been in prior years, and with the dividend payments increasing, this led to a higher free cash flow payout ratio. But this was reduced back in 2023 when they set the record for their most free cash flow ever in a single year at about $1 billion. And so we can see that free cash flow payout ratio dropped down to around 33.57%. I believe that is a very healthy range. And so when we look at the free cash flow versus dividends paid out, for the most part, free cash flow has generally been trending upwards by quite a bit. We can see there was a little bit of a dip down in 2019, and like I just mentioned, in 2022, but overall, the growth has been really good with that 10-year free cash flow CAGR at 12.65%. So really, in my opinion, this company checks all 4 boxes when it comes to the dividend metrics. Decent starting dividend yield, free cash flow payout ratio has stayed in a healthy range, they've been increasing dividends every single year and have a good history of dividend payments, and the dividend growth has been absolutely phenomenal, and it is backed by free cash flow growth. If we go over to my balance sheet breakdown spreadsheet, come up here and plug in SNA and hit enter. We'll see all this data automatically load in, again thanks to ticker data. And one of the things you'll notice, first off, let's talk about the debt to assets ratio over time. This is essentially total debt divided by total assets. And we can see as of right now, the debt to assets ratio for this company is sitting at 16.98%. And again, we simply get that by taking the total debt and dividing by total assets. And so a debt to assets ratio of just 16.98% is extremely healthy. We can see the total assets for this company easily covers the total debt. And so the debt to assets ratio hasn't only been good over the past decade, it's been phenomenal, and it's even been improving over the past few years. We can see it looks like in 2020 it was sitting at 22.6, 2021 18.26, and now it's all the way down to 16.98%. Let's look at the current ratio over time. The current ratio is essentially total current assets divided by total current liabilities. And this is going to tell us how easily a company can meet its short-term obligations. And so typically if we see a company with a current ratio of around 1, that means that they can barely meet their short-term obligations. So for most business models, you obviously want to see a current ratio that's around 1.5 or higher. But Snap-on's current ratio is sitting at 3.88. And just like the debt to assets ratio over time, this is something that's been steadily improving over the past 7 or 8 years. So from a short-term financial health perspective, this company is in a phenomenal spot. In fact, if they really wanted to, we can see the total current assets can cover the total debt for this company. They could honestly pay off all their debt if they felt like that's the right thing to do. There's not many companies that can say that they could do that. So I have to be honest, Snap-on isn't a company I've paid much attention to in the past, but as I use my ticker data spreadsheets to dig deeper into this company, it appears this could be a gem that's been hiding in front of me all this time. I don't currently have plans to buy this company, but I'm definitely going to be adding it to my watch list and watching it quite a bit closer. So go ahead and let me know in the comments down below what you think of Snap-on. And like always, if you'd like to get access to download any of my spreadsheets and also access to the ticker data add-on in Google Sheets, then you can head over to tickerdata.com at the link in the description. So with all that being said, thank you guys so much for watching, and please don't forget to like and subscribe to the channel.